Today, after a decade of proposals, spot Bitcoin ETFs start trading on U.S. exchanges. Bitcoin and Ether surge as crypto investors celebrate the new listings. And Sylvia Jablonski of Defiance ETFs explains what the launch of these new products mean for the crypto industry and Wall Street. Welcome to CNBC's Crypto World. I'm Talia Kaplan. It's official. The SEC has approved the first spot Bitcoin ETFs in the U.S., and they're already trading. We'll talk all about them in just a bit, but first, let's get a check on crypto prices. By noon Eastern, Bitcoin rose 1.3%, trading close to the $46,000 mark, but that's down from earlier when it briefly crossed the $49,000 level as those ETFs opened for trading. Ether, meanwhile, getting a big boost, jumping more than 7%, and Solana rose 5%, inching closer to $100. Let's also check on crypto-focused stocks. At noon, they were deeply in the red, with MicroStrategy and Coinbase dropping 4.7% and 6.3% respectively. Miners, Marathon and Riot dropped more than 13% in the past 24 hours, while CleanSpark fared a bit better, falling 8%. All right, after more than a decade of proposals submitted to the SEC, the agency has finally approved the first spot Bitcoin ETFs for U.S. markets. The announcement came just after 4 p.m. on Wednesday when the SEC approved a rules change that paved the way for the creation of these ETFs. As part of that decision, Chair Gary Gensler said in a statement that circumstances had changed since 2018 when the agency began rejecting proposals directed at the creation of spot ETFs. Of course, the circumstance that changed, that August 2023 ruling when a U.S. Court of Appeals told the SEC to go back and review Grayscale's application to convert its Bitcoin trust into an ETF. Now, Gensler also said the agency was merit neutral, but pointed out that he believes Bitcoin is speculative, volatile, and used for illicit activity. He made it clear the agency did not endorse Bitcoin with this decision. Nevertheless, Wall Street and crypto celebrated the decision as a huge advancement for digital assets. In total, 11 ETFs got the go-ahead and all are trading today. Here's where those ETFs stand as of noon Eastern. They're all in the red, but the bigger story is demand. The Grayscale Bitcoin Trust rose nearly 6% at the beginning of the day, while BlackRock's iShares Bitcoin Trust jumped more than 4% this morning. Those funds saw millions of dollars in trading volume throughout the morning, which will be a key metric Wall Street watches to understand just how popular these ETFs will be. One way asset managers are hoping to beat the competition and drive adoption: lowering fees. We already told you this week that ETF issuers have been updating their fees right up to the final moments before listing, and most of them have settled between 0.2% and 0.3%. There are some outliers, though, like Hashdex's 0.94% fee and Grayscale's 1.5% fee. But most issuers hope to compete with exchanges like Coinbase, which charge as much as 0.6% to buy Bitcoin directly. Now, crypto experts and the ETF issuers themselves joined CNBC throughout the day to react to the launch of these new products. Here's what they had to say.
This is a monumental step for the crypto industry and for Coinbase too. And the reason is that, look, there's 52 million Americans who have been using crypto over the past decade. And I think they've been hungry for some kind of acknowledgement from government and the SEC in particular that this asset class is here to stay.
I do think this is an important milestone for the asset class. 11 ETFs or ETPs coming to market on one day is actually historic for the ETF industry. You haven't seen this kind of level of competition on an exposure day one ever. I think that means that there are many firms that believe there's merit to the asset class and pent-up demand.
GBTC is coming to market in a very differentiated way. It is going to be, as of this morning, the second largest spot commodity ETF in the world. It has $28 billion of assets under management. And other issuers may try and differentiate on fees. For GBTC, it's about size, liquidity, and track record.
So I think in the long run, you're going to have two or three that actually win. I don't think it'll just be one winner. It'll be a couple winners. We have an ETF in Canada with CI Group, and we started second. We were second place, and now we're the largest ETF. So all you really care about as an investor is, does this thing track Bitcoin? We were less than 1% tracking error. Our largest competitor was 11%. And
Wow.
So all ETFs are not created equal. So what goes into that? It's your execution, it's your liquidity, it's the hidden fees.
I do think that the fees make a difference. We have approached this differently from some others. We believe that Bitcoin is a public good. And so we're not looking to maximize profits here. 21 basis points, 21 shares is our partner. 21 million Bitcoin is the number that will, the maximum number that can be printed.
Grayscale was at 2%, they dropped to 1.5%, right? And people are like, why didn't they drop all the way down to 0.2%? Well, the big thing is, if you want to go sell your Grayscale and try to roll somewhere else, you're going to have to pay taxes, unless you're in a tax advantage account. So there's a lot of assets that are going to stay in Grayscale, right? 0.2, 0.3, 0.4. How much does it really matter? Some advisors really care. Other advisors say, hey, I just want to buy something that's a great product that I think is going to track the price correctly.
What investors look for in ETFs is performance, and performance is a couple of things. It's market quality, which is liquidity, it's spreads, and of course it's tracking. How well does this vehicle deliver what they're actually looking for, which is spot Bitcoin? And that's what investors so far haven't been able to get in an exchange-traded wrapper. And so far we are optimistic that that's what we're going to be able to deliver.
All right, Crypto World's Mackenzie Sagalos spoke to Sylvia Jablonski of Defiance ETFs to find out what she thinks these new products mean for the industry.
Thanks for being here, Sylvia. Let's start with just your reaction to the past 24 hours, the approval of these ETFs, and their first few hours of trading.
Thank you so much for having me. Well, I think the last 24 hours have been some of the most exciting hours of the markets, certainly in 2024. Everything from the price of Bitcoin soaring, price of Bitcoin falling. There was a hack, there wasn't a hack, it's approved, it isn't approved. So it's definitely been a lot of excitement. I think I sort of expected what happened, right? I think once we got the approval, you see that price kind of spike. And now you have all of these different ETF issuers that are trying to get to market. So I think today is going to be super interesting. And I wouldn't be surprised if we saw a lot of volatility in the price, because you're going to have a lot of creations on new funds coming into the market. You're going to have a lot of redemptions on kind of the old funds, perhaps, that were using futures. So it'll be a choppy couple of days, I think, for the underlying crypto asset.
So we've seen millions of dollars in trading volume so far today, and some are estimating that we could see $100 billion in inflows this year alone. What's your view on demand for these assets?
So it'll be interesting to see where this actually shakes out. I certainly think that there's a high chance that the price of Bitcoin begins to appreciate, and that the volume of kind of pickup and asset allocation begins to accelerate. I think there's a couple of reasons for that. One, I think you have just, speculators that think that the price of Bitcoin is going to soar because of all of this noise going around it, and whether they believe in cryptocurrency or Bitcoin or not, they're price trend followers, and so they'll jump in. I think number two, though, is the more practical trade and the more, kind of the longer term vision for what could make the asset grow. You now have a product in an ETF wrapper, which means it's tradable at any minute of the day, which you had, arguably with Coinbase and some of the other platforms, but you don't need a digital wallet. The shares are custodied. You can go to a lead market maker. You can go to a market maker to make sure you're kind of getting in at a good price. You can create a net asset value. So, pricing is more efficient. Settlement is more efficient. I think the due diligence groups at big institutions will like it because they can actually now review it and not worry about, how do we manage a digital wallet or digital wallets for our 10,000 clients that want exposure to Bitcoin. So I think the institutions that believe in the use case and want the alternative income, whether they think it's, kind of digital gold or just an alternative currency allocation, if they take a couple percentage points of allocation to this, then that adds up to those billions of dollars that people are talking about.
Now, in terms of adoption, what are your expectations for secondary fund flows or allocation into things like retirement and larger portfolios?
All of that takes so much time. I've been in the ETF business for a long time, and there's been so many products that, companies that I've worked for and work for have, been waiting for in terms of getting up on retirement accounts. And those products are, far less speculative, let's call it. Perhaps they're options related products, or perhaps they're products that have a tiny bit of leverage. So I think, self-directed retirement accounts, sure, I think they're going to be able to trade this stuff and pick it up. I think in terms of, kind of the classic retirement account that you may have through your employer, you might not see that. In terms of crypto allocation, I do suspect that any kind of fund of funds or mutual fund that takes, a small percentage of allocation to this is very likely to use the ETF. I mean, you're talking about some of them have, 30 basis point fees, which is really nothing as compared to probably the prices and the slippage and the things you're getting with the futures-based products. So it definitely has some opportunity there.
Yeah, from a more narrative perspective, Wall Street has long been the sort of antithesis of crypto. Bitcoin and others were lauded as a way around traditional finance and maybe directly in opposition to Wall Street. Now, this is maybe the largest entangling of Bitcoin and traditional finance in history. What does this mean for the narrative that Bitcoin or crypto is new finance? And how does that storyline evolve going forward?
Well, I think what's really interesting, particularly as it relates to ETFs, is that for many, many years, you just didn't see much innovation. There were products that were grandfathered in, whether they're, things like levered funds, for example, and they were restricted to certain leverage points. And now you see products that have found creative ways to beat those leverage points, 3x, 4x, 5x. You now see active income funds, for example. And I think crypto is just another new idea that came in. And, it seems as though the regulators have been, I don't want to say, kind of forced, but they've certainly been presented with like mostly new ideas this year that differed from the typical types of ETFs that they see. And now, they're kind of examining new things. And, there's some background here, right? We all know there was a lawsuit that went on around this. And so I think, kind of the nature of, kind of forcing the review a little more deeply and opening it up to approvals, the fact that happened, I think now, will challenge the market in terms of new and different types of creative products that will come out around this. So to answer you more specifically, I wouldn't be surprised now if we see all sorts of, new crypto filings, portfolios of cryptos, income on crypto, leverage on crypto. I think it's all going to be filed for. We'll see what actually gets approved and hits the market, but this is likely to grow. In terms of whether or not it will be adopted, well, we'll see. I think there are billions of dollars in crypto. There are multi-billions of dollars in gold, and a lot of, Wall Street believes that crypto is kind of the next digital gold. So if that transition really happens, then these products all have a shot of gathering assets. But it's going to be slow. I mean, you definitely have a lot of haters out there still. For every enthusiast, you probably have 5 haters.
Okay, that's all for Crypto World today, but we'll be back again tomorrow with a look at the impact of the SEC's decision on crypto miners. We look forward to seeing you then.